spread across the world. We found that the most successful growth areas of Takaful from Asia, Southeast Asia, Malaysia, and then the GCC, while in Africa, to start taking over after that was a little bit late and slow. Despite that, the first and maybe the only Sharia-compliant country presented insurance, fully insurance Sharia-compliant, was in Sudan. But that also didn't assist a lot to grow Takaful, which was very slow at the beginning, spread from Sudan to South Africa, Egypt, Kenya, and some successful stories here and there, but I believe was affected by the overall situation of Africa suffering from the normal challenges which are meeting or facing the conventional insurance industry with the low penetration everywhere. I remember when we thought about Africa ReTakaful, Takaful industry that was 2010. Takaful industry was booming, and the expectations were very high for 2 digits growth, maybe sometimes over 20%. But with time, these very high expectations turned to be slower and slower, and we found that in 2017, the growth was about 7%, which was definitely above the growth for the conventional industry, but still not meeting the expectation at the beginning. For a few years, we are discussing in the industry the challenges, and if we have something with the module or with the practice, which I believe may require revisiting the practice and how we are introducing the Takaful and how we are marketing it to our clients. In Africa at the moment, we see that many countries are doing Takaful business. In addition to the countries I mentioned, we will find in Nigeria, in Tanzania, in Tunisia, in Algeria, Morocco, there are projects for that. In South Africa, also, there are some talks about a new project for Takaful. And it is known that in South Africa, they started in 1987, the first Takaful company there, or Takaful window. But unfortunately, the company didn't succeed, and it has to close afterwards. But also in Africa, we find that a few countries presented full regulations for Takaful. We find that Nigeria was the first one almost to present full compendium for Takaful business in Nigeria, and at the moment we see also Takaful regulations in Kenya, in Tunisia, in Morocco, despite that there is no Takaful company yet, and in Egypt recently the regulator presented more in-depth Takaful regulations. Takaful in Africa is of course, is facing the same challenges of insurance. The Takaful is facing also, in addition to the same challenges, the widespread of the communities or the societies. It is underdeveloped societies in general. Takaful is facing also the culture which is not assisting people to go for insurance. And I believe, for example, if I talk about a country like Egypt, despite that the majority are Muslims, but you will find that even between Christians in Egypt, that they don't believe in insurance because they believe more in God, and insurance is against God's will. So it is not religious understanding more than a cultural concept and a cultural belief. I mean, those are restrictions which may require the insurance practitioners or Takaful practitioners in general to try to focus on how to change the beliefs or the ideas of the customers or the clients from looking to insurance as a necessary service or if it is necessary, is against, when we insure, it is against the beliefs of the people. It's our role to assist, to understand that insurance is necessary, especially for those who don't have enough income to face the fluctuations or unpleasant results of insured risks if it happens. In the development of Takaful, I believe also that Takaful practitioners need to look again for, and I believe we listened this morning about the idea that Takaful operators are usually focused on large risks and general insurance or general Takaful business, which in most cases are not relevant and has nothing to do with the beliefs. I can't imagine that a large industry or factory, the decision of the management to insure with a company will depend on if it is halal or not. Because usually people in such institutions, they are going to insure to protect their assets, and what they are looking for are prices, the service, the security and support they will get. While it is more relevant when we go to more personal lines, if it is family business, life family business, or it is small and medium sizes enterprises where almost is controlled by one or very few owners who are really interested in not only to insure their assets, but also to insure their assets in the way they believe. What is making the situation even is more complicated, that many of Islamic scholars at the moment are see that even conventional insurance is Sharia compliant if we control the investment of the money or investments of insurance. So as practitioners, we need to focus more on how to be closer to our markets, how to focus more on those products where they can be accepted and can be promoted easily. And I believe these explain why Takaful is very, very developed in Malaysia, because they are focusing more on life and more line products which are related to the personal beliefs than those general or large risks than the others. Also in Takaful, I believe we need to focus more on training our people to be ready to market and to sell the products. Also, we need to adopt the new technologies, which is now dominating every activity of our life, and it is more and more is very effective in insurance and is enabling insurance or insurers and the Takaful operators to sell the products very cheaply as compared to the normal ways of selling the insurance products. We have very successful products, like in Kenya, for example, and some crops products, they managed to sell those products to the low-income people through the mobile applications, and the premium can be collected easily, and the claims can be also paid in time of loss without a lot of expensive management of such operation. Also, one important factor which is assisting to develop the industry is the regulators. We saw that regulators in Nigeria and in some countries were behind the presence of the first Takaful operators. In some other countries, the Takaful operators started and then the regulations followed. But when regulators are focusing and trying their best to regularize the Takaful operation, this will assist to develop this industry. Saying that, I believe we also may have in Africa at the moment, we have a few challenges Just last week, the Egyptian regulator presented some regulations to allow Takaful operators to transfer or to convert it to non-Takaful operator. And I believe this will have an impact on the Takaful industry in the country because it's the first IC. Also in Sudan with the current development, maybe our Sudanese friends can talk more about it. I see that there is a trend, at least a discussion in the industry, that it's time now to allow also non-Sharia compliant or conventional insurance companies to come again, which is, I believe, by a way or another, if this happens, it will affect the Takaful not only in Sudan or in Africa, but maybe in the whole world.
Can I?
Yes, please.
Can we open the questions to the floor, or you have any?
Yes, please.
Yeah. Okay. In interest of time, sorry, Brother Omar. I think I'd like to just open one or two questions to the floor. If there's a yes, first one. I think you're the first one. Yeah. So, Mike, please. In front here. It's coming.
I'm quite used to speaking without a microphone, but anyway, it helps. My name is Shabir Razvi from International Finance Solutions Associates in London. I have a question for the panel. As Brother Safdar and others have sort of pointed out, that we've been talking about this for the last 13 years at this particular conference, the Takaful, the capacity, the risk, and all those factors. My question is really, yes, medical insurance and car insurance, people take it up. And I'll give you a specific example. Yesterday, I was sitting with a client of mine here in London, and we were talking about life insurance. He's got, a portfolio of about £3 million, whilst he has a mortgage or borrowing of about 600,000. And we talked about life insurance. He said, life insurance I won't take because my sheikh tells me not, but I'll do the IHT insurance because it will protect me from not paying the tax man. So, there is this dichotomy. There is this contradiction of, why one would take one particular insurance. And as the brother from Egypt was quite rightly saying that, if we have a factory and other sort of a big business, we'll go and take the insurance, whether it's Takaful or irrespective, because we don't want our place to be burned down. But when the person who is actually making that factory run, if he kicks the bucket, then we bring in the Sharia concept that, someone doesn't say. So how do we sort of fix that hole of the public understanding that insurance, irrespective of conventional or Takaful, is really giving a protection for the future generations itself?
Anybody will take that?
Right, hopefully this is working. I think insurance awareness in the region needs to be a lot stronger, and that has to come from all parties, not just the regulator, but from the insurance market itself. When you look in Europe and the promotion of insurance and the need of insurance, it's foremost to say that you need to have insurance to get the essential of the coverage. So, when we look in these markets, on the life side, you do have the issue that if you are, say, in the GCC and you're a local national Arab, then if you get in the state benefits, then there may not be the need for life insurance. Now, this dynamic may not be there forever. Obviously, with the low oil prices, etc., the governments may not be able to fund the current, say, funding that they are providing their individuals, and there may be an opportunity down the road for that penetration on the life side to increase. So I think it's a combination of all parties being there and promoting why the insurance is necessary, not just for the regulator to issue mandatory insurance. On the other side, you have the issue that a lot of the views of the public is like insurance is a tax. They're there and they never pay out on their claims. So they generally have a bad reputation, and that view and that vision of companies need to change. A lot is down to how companies are portraying themselves in the market, how they are putting themselves there, what value they are adding to the policyholders, to the public, and emphasizing the need and the protection that they need in that market.
Yeah, I just want to add on that I think there's a responsibility here, the shared responsibility of different stakeholders. Partially it's a Sharia issue. You mentioned that there are Sharia scholars who allow conventional big risks so long as the investment is done appropriately. And there is a whole dichotomy or difference of opinions around Sharia scholars having different take on different models. So that's one area that we are not competent to talk about that because they're not Sharia scholars. The other area also is of regulators. Now, I distinctly recall, and one of the brothers is here as well, when savings and family Takaful started in the Kingdom of Saudi Arabia, there was an exponential growth. And people were buying policies because they were well educated. They knew the benefits of it. And the Sharia taboo started to diminish. But the regulator has a role to play to make sure that you encourage that. And then thirdly is the education process as well that was mentioned. So I think everybody has a responsibility.
Just to add Malaysian perspective. In Malaysia, of course there are many opinions. But in Malaysia, the opinion that carries Bank Negara, full stop, is in the law. Even the judges in the civil courts, when it comes to anything to do with Takaful and Islamic banking, they have to refer to the decision of the Sharia Advisory Council of Bank Negara. Full stop. So it helps. It helps. Okay, but not everybody will agree. The judges don't agree. The Sharia scholars don't agree. But Bank Negara put it in the law, so that's it. Okay, next please.
Mushtaq Bak. I've got a lot of questions, but I'll stick to two initially. Just what Mr. Omar Gouda said, a clarification. Did you say that the recent regulatory change allows Takaful operators to get involved in non-Takaful?
No, allowed the Takaful operators to convert to non-Takaful operator.
To convert.
So at the moment, yeah, because in a certain development in Egypt, they were just giving Takaful operator license, not for conventional. So many people who are willing to have the conventional license originally just accepted the Takaful license as a way of doing business. But the regulator now is allowing those companies that they can be converted to non-Takaful companies with certain procedures.
So they become conventional insurers.
They will come conventional, yeah.
That is a very retrogressive and confusing state for the Takaful market. And, just alluding to regulatory aspects, of course, Saudi Arabia is the huge enigma. I mean, and I'm sure you as operators, whenever I speak to Takaful operators, both international and local, they scoff at the whole approach Saudi Arabia took, especially when they introduced the cooperative insurance law and the whole, the architecture of, initially people didn't even know whether it was Sharia compliant or not. They didn't even have a Sharia board. It took almost a year and a half to drag them to introduce a Sharia board. Still today, there is a lot of confusion. SAMA has got a top-down approach. They impose it. You either take it or leave it, or you don't get a license. Of course, no doubt, no wonder the market penetration and the confusion about Takaful is so prevalent in potentially one of the largest markets in the world. How does operators, navigate through this, especially when I hear there's very little lobbying and also very little, debate and dialogue with the regulator, which is SAMA. So despite the fact that there has been some progress, in reality, Saudi Arabia is really the main key to unlock in terms of how they approach Takaful in this respect, from a Sharia point of view.
I think Saudi Arabia has adapted very well to the cooperative model, the way I see it. Again, my colleague here, Mahesh, will agree with me that it's a far more simpler model where there is more transparency from a perspective of a rating agency, because Takaful is complicated. Having said that, the 90-10 approach right now seems to be working very well in the kingdom. Now, you are right that the companies that sort of had to evolve from a pure Wakala model with existing in-force blocks on Wakala model transforming to this new approach many years ago, I think in 2005 or 6, have some challenges because they promised policyholders surpluses on an underwriting basis, and now the surplus will be shared on an overall profit basis. There are legacy issues. In fact, we are dealing with one legacy issue big time. But I guess by and large, the market has adapted reasonably well. And I feel from a practitioner, actuarial, technical perspective, it's easier to be able to manage that rather than managing Takaful companies where there are huge issues of Qardul Hassan and writing off and perpetual cars and all these issues that come up.
Cooperative model is a Sharia compliant.
I'm not a Sharia scholar, so it is out of my remit. It's out of my remit. I'm talking of a practitioner's perspective.
Yeah, I mean,
Okay, just keep speaking.
they have the cooperative model there, and you could argue there has been a fair degree of interference in the market. But what we like about the Saudi cooperative model is a fair playing field for all, if not most, companies in the market. The rules are very clear, and the companies have to operate under that. As soon as you go into the other markets, the UAE, most of them have a Wakala model, but it's open to flexibility in terms of how they want to use it. And then you've got them competing with the conventional market there. So what I would say is in Saudi, everyone's playing under the same level playing field.
But you have a duty of care as a rating agency to say, or give an opinion at least, whether, in your opinion, whether that is a Sharia compliant model or not.
As a rating agency, we're here to opine on the creditworthiness of a company and their ability to meet their policyholder obligations, not how Sharia compliant they are. That is the role of the Sharia board.
No, but if they sell it as a Sharia product, you have to have an opinion.
We have to take into consideration in the ERM assessment in terms of the philosophy and the approach and those type of things, but we're not here to opine on how Sharia compliant a cooperative model.
Okay, one last question, if there's any. One short one, please. We are running late for lunch.
Hello. I think the gentleman, what he's saying is that the rating companies also gave AAA star to the bonds in the 2007, and if the rating doesn't call out a problem in the system, then it's not Sharia compliant. What I think he's also implying that in Sudan, we don't think Saudi is a very Sharia compliant model for you to be using as an example for the main market, even though that they have the numbers that makes the rating companies basically compliant or trying to help them in an easier way. What we're trying to do in Takaful is try to find a new solution to an insurance problem. We're not trying to make it easier for rating companies or a simpler way. I think you're trying to fit a square in a circle. You got to find a new rating system for Takaful that actually incorporates things. So if we're talking about shareholder equity, then we have policyholder reserves that need to be included in a calculation that isn't included at the present system. So I think the question or the summary is rating needs to be changed, or the Saudi model is not definitely an example that we can be using. Okay,
we'll continue over lunch. This debate. Okay, let me just sum up. Takaful companies have mostly the same challenges as conventional companies. It's very competitive out there. IFRS 17 is for both. Climate change, InsurTech, all these insurance. But in addition to that, there are some unique things, challenges for Takaful. To me, in some countries, for example, the opportunities to do in Sharia compliant investment is limited. That's a challenge. There's also the challenge of the model. If you take, for example, the Wakala model, whilst conventional can use all the premium for the expenses, Takaful is limited to the Wakala fee only. Yet, the CEO has got to be paid as much as the conventional CEO. Everything else, the cost is the same. So these are the challenges. The agents have to be paid acquisition cost as much as the conventional. It's all level playing field. In Malaysia, all the regulation applied to conventional and Takaful same. In addition, we have Takaful regulation. So Takaful is always very challenging. Okay, in spite of all this. And then, of course, there's a shortage of talents. This is a real challenge. You know, you take people from conventional and they come in, they bring all the conventional mindset. They might have all the technical abilities, but they don't appreciate the Takaful issues. So, and last but not least, we all have to overcome, even in Malaysia, the awareness is very low. The attraction to Takaful is always at the lowest end of the shopping list. And we need to overcome all these issues. Yeah. So, ladies and gentlemen, we close with that, and let's have lunch. Okay. Thank you very much, and thank you very much to all the panel members.
Okay. Thank you very much, Tonaji and the panel. We can proceed to lunch. There is also a prayer room just outside here, is marked up. So those of you who want to pray and eat, or eat and pray, that's your choice. Just to say on the Saudi Arabian model, I think my own thinking shows that probably with some very small modifications, it can be made Sharia compliant. This is my view. Next conference, I will present the model. Thank you very much.